Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by these great sponsors. Axon started out of a passion for keeping agriculture moving. Imagine having 100 years of tire and wheel knowledge in your back pocket the next time you sell a piece of ag equipment. To find more or become an Axon dealer, please visit axontire.com. This podcast is also brought to you by Valley Transportation. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransinc.com for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is also brought to you by Ag Direct. No matter how you buy your ag equipment, from a dealer, auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast. Marks with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. If you'd like to get yourself a nice pocket knife, go to marketing at axontire.com, and they will send you a free Alliance branded pocket knife that you can take so you can take advantage of this marketing offer at marketing at axontire.com. And make sure you mention you heard it on the Moving Iron Podcast when you do so. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all of your trucking needs, or go to valleytransinc.com. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy ag equipment, from a dealer, an auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Chip is with Blue Reef Agri Marketing from out of Morton, Illinois. So cold, Chip, my tongue's frozen. He's nice enough to come on once a week to talk about what's going on. So, Chip, how you doing this morning, man?
Hey, doing well, Casey. Trying to stay warm right along with you.
Definitely a cold front come through, and biggest bulk of the area, you can just see where the temperatures are. So it's been crazy, but it hasn't really put a halt to the market at all. If you take a look at what's going on, especially yesterday when you look at wheat, man, you had a big run up, and I'm sure the majority of that is geopolitical driven. But as you look at that market, Chip, what are you seeing out there right now?
Yeah, these markets, I was thinking yesterday, have done a really good job of kind of whether it's trading weather or geopolitical events like this, or news. The market has done a really good job the last several years of kind of waiting it out. 20, 30 years ago, if you would have got news that, Russia might be ready to invade Ukraine, the grain markets would have just been skyrocketing. The wheat market hasn't really done that. They waited it out to see what the real news was going to be. And, lo and behold, we had, I guess you could call it a soft invasion, if that's the right term for it, here over this past weekend. And the funds are actually caught short in the wheat market for a lot of reasons, primarily being because they used it as the short leg of spreads. They were long corn short wheat, they were long beans short wheat, then they were just short wheat. And, when that happened and escalated this past weekend, everybody ran for the exits. And we had almost a limit up day yesterday in the wheat market, up a little bit in the overnight. And, it is all about this Ukraine situation, and it is a very fluid situation. You get multiple conflicting news stories a day on, what's actually happening on the ground there, talks behind the scenes. And, it's really hard to trade these markets right now. And, it's been easy if you're long, don't get me wrong. And it's been a straight up affair, and especially beans, but corn to a lesser extent. And, wheat was certainly straight up yesterday. But my fear is, what we're telling everyone we work with is just get ready for a lot of volatility. This is not volatility. we might have 30, 40 cent range days in beans, but it's all to the upside. And you get a little bit of intraday fluctuations. And, by the end of the day, oh, look, beans are back up 28, 32. Mm-hmm. Great day. But the volatility hasn't really started yet. And by that, I mean, I think before it's said and done, probably sooner rather than later, you're going to start to see 50, 60, 70 cent swings in corn, high and low, dollar plus, possibly as much as $2 swings in beans. And so, there's a lot of talk. Oh, we're going to $18 beans. We're going to 20, 22. We may be, but it's not going to be straight up, I don't believe. We might have to go from 16.75 back to 14.50 before we get to 18 or 20. And that's going to be the hard ride. So yep. As a producer, you just, have to be ready. It's not the time to be saying, oh, this is great. We're going to record highs and we're going to have a good year, because the pain is yet to come. And it is going to be a good year. It's just I'm afraid that it's not going to be straight up like it has been continually from now till harvest time, and life is great. It just typically doesn't work that way in the markets, Casey.
Yep, no, that's a good point. Buckle up's going to be a bumpy ride for sure. So let's talk about soybeans for a minute. You just brought that up in soybean crush and how that's all playing together right now. I mean, soybeans have been on a tear, like you've talked about. Every day has just been an update, it feels like. It's been a long time since I've seen any red associated with soybeans. So as you're looking at the soybean market, what are your thoughts there?
Yeah, there's obviously a lot going on there. We've, I think, gone a long way in digesting the drought in Brazil and Argentina. We don't know for sure what that crop size is, but certainly the market's trading, tens of millions of metric tons below what we thought 90 days ago. But on top of that, so you've shrank the world supply from the southern hemisphere, or what the world thought we would have for a supply is going to be less because of that drought. You continue to have very tight world vegetable oil supply, and in crude oil, north of $90, kind of helps the biodiesel play a little bit. And this vegetable oil situation is really explosive. So people, sit back and they're like, well, why are beans rallying? It's not that. The Ukraine situation, they raise corn, they raise wheat. Why are beans rallying? Well, when you combine the South American drought, the tight vegetable oil stocks, and this is something I learned too. I've been, in this business for a long, long time, and didn't realize until this whole Russia-Ukraine situation, the Black Sea is responsible for, I think I read 76% of the world's sunflower oil exports. And so with the tight vegetable oil situation, that directly is responsible for potential soy oil demand. And, I would argue beans have as much, maybe more of an effect from this Russia-Ukraine situation. So you've got a lot of bullish things factored in there, from the drought, from the vegetable oil situation, and now this Black Sea situation, and the fears around that, kind of clamping down or inhibiting the flow of what normally flows out of the Black Sea, which is a lot of things. But the sunflower oil is massive. And so very quietly, the soy oil market has, just been rocketing higher, now sitting, about 71 cents. And, doesn't look like it's ready to stop yet. But I do think, like we talked earlier, I don't think it's going to be straight up. Every other time in history, and there's been about 4 or 5, I believe, that we've been north of $14. You have massive volatility, just massive. I'm talking $1.50, $2 price breaks, and then $2.50 rallies. And we haven't seen that yet. It's been straight up, but eventually somebody's going to want to take some profits. The market's going to take a breather. It's going to get overextended, and you're going to start to have swings that just really make people nauseous, I believe. And it's been, again, it's great straight up, higher again in the overnight. As we're talking right now, beans are up, 15, 16 cents, and life looks great. But buckle up. You better have your seatbelt tight because it's coming. Bottom line, though, you look at new crop, you knock on the door of 1480 November beans. Massive profitability there.
Yep.
And you don't have to be all in. That's the thing about this. You don't have to try to predict what Putin's going to do. Is he going to invade? Is he going to pull out? Is he going to get, what he wants through talks? Are we going to have a drought? You don't have to predict any of that stuff because you got a lot of tools, both cash sales, options, where you can kind of have your cake and eat it too. Crop insurance is going to play in there as well. And, you don't have to put all your eggs in one basket. You just have to, have a plan and execute it. And you don't have to, at times, predict a drought, predict a bean. Yeah, beans are going to 20. We're not going to sell anything. Well, they may go to 20, but they also may go back to 13 too.
Yeah. All right. So on that same note, if you look at December beans right now, the overnight December 22 beans are $6.04 and a half. And again, that's good profitability, even compared, even where input costs are at. That's still a profitable place.
Absolutely.
So, you start looking at March 22 corn, some at, 673 and a half. I mean, so there's a bunch of money laying out there that you can lock in. And to your point, you don't have to go all in. You just have to, do a little bit to kind of get some profitability booked out there. So I guess the same with corn. I mean, you look at crush rates for corn for ethanol, that's kind of fallen off a little bit. But even with, crude oil knocking on the door of almost $100 right now, I mean, you're above 92 and a half, 93, 94 for crude oil, especially if some geopolitical stuff pops off. You start looking at closer to $100 oil, ethanol is going to play a bigger part in the overall energy look.
For sure. And it has backed off a little bit. Some of that's seasonal. I think that as we start seeing warmer weather and, it appears we're even the crazy states are trying to get back to normal. So that's telling you maybe we're finally putting this whole COVID deal behind us. Not that it's gone. It's just that maybe some rationality is starting. So that should help, with gasoline demand into the summertime. Usually it kind of continually grows into summer and peaks. So I think that will help. Crude oil certainly is going to help those margins. And I mean, it's a tight situation, whether you're talking soybeans, vegetable oils, corn. There's a lot of competition. There's a high bar out there that we have to raise a big crop here and help, try to rebuild and put a bigger cushion in these world supplies. And but to your point, Casey, a lot of profitability. We finally just pushed north of $6 the other day here in new crop corn, December corn, and you gotta take a look at that. A lot of people, I know it's geographic, but a lot of people kind of shoot for that 200 bushel target. You're talking $1,200 gross in the heart of the corn belt, where the best ground where they're shooting for 230, 240, 250 yields. Massive gross dollars. And again, like we talked before, you don't have to lock it all in. You're going to have a great revenue floor through crop insurance. It's going to be expensive this year, partially because of the volatility factor, partially because, beans will be the highest spring price ever. Corn, I think, is going to come in somewhere around the second or third highest ever. So you're going to be able to, ensure a tremendous revenue, and that's going to be something that definitely lets you sleep a little better at night. But again, it's great now, and maybe we're going to go a lot higher this summer with some uncertainty there. And certainly, I don't believe we've ever put a February high in from a new crop perspective. Don't know why this year would be any different, but again, you're staring at some massive profitability in here, even with record high input prices.
Yep. All right, let's jump down and talk about hogs real quick. So hogs are hog herd continues to be off from what it's been in previous years. You take a look what's happening there, and there's been still just bullish tones everywhere you look on as far as hog market goes. So what are your thoughts there?
Yeah, just unbelievable strength. People, you look at the bean market rally, and then you come over and look at the hogs, and you're like, "Holy cow!" Kind of puts the ascent, the rate of ascent in the bean market to shame. Just every day, it seems like we're $2 higher. The cutout screaming higher. I think there's a lot of bullish factors there. It goes back to the heart of the COVID lockdowns when the packing plants were closing, and we had to basically liquidate large numbers of animals. We've never recovered from that. High prices, in the aftermath of that, didn't stimulate the normal amount of growth in the industry that we normally would have, partially because of supply chain problems and the cost of buildings, putting up buildings just increased dramatically. So we didn't expand enough. I think that we've had a lot of health issues in the herd as well. And here we are. And, I think what's been quiet, and this is just speculation on my part, is, I think the problems in the poultry, in the chicken flocks in the Southeast with the health there has spilled over and helped add a little demand on the pork side. Again, I don't know that there's any data on that yet. That's just speculation. But like the bean market, everything's just lining up on the bullish side. Certainly, corn and soy meal prices have cut into margins a little bit. But holy cow, this hog thing is on fire right now. Doesn't show any signs. I thought yesterday that we were kind of acting maybe a little bit tired in the hogs, and bam, the last 20 minutes, and you end up 260 higher, 267 higher in the Aprils yesterday, north of 112. So pretty historic move there. A lot of people talking that by summertime we're going to have to see prices move into new all-time highs. Wouldn't be shocked by that, but again, it's probably not going to be a straight up ride. You're going to probably have a lot of volatility in this before it's said and done. But certainly one of the bright spots of the ag world right now is the hog prices.
Yep. All right. Just talk about cattle for a little bit. Cattle have been choppy to say the least, more towards the downside here as this week has started out. As you look what's going on there, what are your thoughts?
Yeah, I think similar to hogs. I mean, I think we got some good things. Obviously, cash prices here, 142, 143 range. It's the highest we've had in a long, long time on the cash side. But again, I think the drought, we haven't seen the full effects of that drought and the liquidation that we've seen on the, heifer and cow side yet. That is still going to flow through us eventually. And so, it's just going to be at a slower rate than what we've seen on the hog side. So I think things are still very friendly, but cash is finally caught up to where the futures are. And in fact, the Aprils now have a, $3-4 premium to where the cash market is. So it makes sense why we've kind of slowed and chopped around in here. I think the cash market is going to have to, push up into the upper 140s or north of 150 before we see that next big move. Again, I think the breaks will be bought. You could easily see a lot of volatility, but I think later this summer you'll start seeing more of the effects of the breeding stock liquidation that we've had for almost 2 years running. And unfortunately, there's been some snow out west, and I don't think we fully fixed that problem yet, unfortunately. So I'm not sure that the liquidation phase is fully over yet, and that will have long-term friendly effects in the cattle market and on prices. So I think we're destined for higher. The the only hiccup here is, the economy. I mean, inflation is certainly part of this, and depending on the rate of increase in interest rates from the Federal Reserve, and what effects that has, just what effects inflation has on the economy, and B, what Federal Reserve action effects will have on the economy. It's still a very big piece of this because you can talk about supply all you want, but that's only half the equation. You got to have demand, and I know for one, just yesterday I went. I like a steak as much as anyone now and again. I bought 2 fillets. They're $29 a pound. So
yeah,
yeah. You know what I mean?
Yeah, crazy.
Eventually, the demand side of this. I bought some hamburger as well. It was $5.50 a pound. So, there is some, elasticity to demand, and the higher you go, the more that will start affecting things. So, you got to swallow hard when you really got to want a steak for $29 a pound, Casey.
Yeah, it is expensive out there right now. I've done the same thing where we bought a side of beef the other day, and it factored out to about $5.50 a pound. So it worked out pretty good. But I see those prices out there when you go get a ribeye, and it's $18, $19, $20 for the steak. That's how many of those you're going to buy before you just switch to something different, whether it's chicken or whatever it might be. So yeah, that price is going to drive consumer buying for sure.
Again, something that's probably friendly for pork,
right.
Exactly. in the big picture. But that's what scares me a little bit about the beef side. I mean, I think that the numbers and the liquidation you've seen is very friendly, and I still bought them. Don't get me wrong, but eventually I'm going to be like, how much for a steak? I don't know about that.
Yeah. Yep, craziness. So, all right, Chip, well, good stuff as usual. Folks want to reach out to you and get more information about what it is that you're doing at Blue Reef Agri-Marketing. What's the best way to do that?
Yeah, best way is just call our office. That number's 309-550-7213. Love to chat with you.
Right on. And I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram so you find the latest editions of the Moving Iron Podcast. Also, go to MovingIronLLC.com for all the entire library of the Moving Iron Podcast, all the blog posting, as well as all the information for the Moving Iron Summit coming up in Nashville, Tennessee, September 6th, 7th, and 8th at the Hilton downtown there. So it'll be a good time to check that out. Good networking opportunity. Also get a good lineup of speakers there as well. So, Chip, appreciate you being on the podcast, man.
Hey, I appreciate it, Casey. It's going to get really interesting. So we're in for a good ride here over the next few months.
Absolutely. So with that, I'm Casey Seymour with Chip Nellinger. Let's go some iron, folks. Out. Axon Tire is going to have more tips, tricks, and client advice throughout the year and in September at the Moving Iron Summit in Nashville. If you're looking to sign up for the event, please head over to MovingIronLLC.com. We hope to see you there. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransitinc.com for all of your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy ag equipment from a dealer, auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving iron in the 21st century.